You open an app, tap, send money in 3 seconds, earn rewards, get a virtual card. It's fast, clean, and feels modern. But here's the question nobody's asking. Is your digital bank account actually halal? Millions of Muslims are switching to digital banks, neo-wallets, and online finance apps, but most don't realize that convenience doesn't equal compliance. The app might look Islamic, the interface might say ethical, but under the hood, it could be running on the exact same interest-based system as a conventional bank. In this video, I'm breaking down the full Islamic ruling on digital banking, what's halal, what's haram, what scholars actually say, and a practical 5-point checklist you can use today to protect your wealth and your deen. Let's clear up a myth first. Digital banking isn't a new financial system, it's just a delivery method. Instead of walking into a branch, you use an app or website to deposit, transfer, borrow, or invest. The back end, often the same clearinghouses, same reserve banks, same financial networks. Some digital banks are built from scratch on Islamic principles. Others are conventional banks with a fresh UI. And some, they're just tech companies partnering with interest-licensed banks. Key point, Islam doesn't judge the screen, it judges the contract. The medium is neutral, the mechanics decide the ruling. Before we label any bank halal or haram, we go back to the foundation. Islamic finance isn't about banning money, it's about banning exploitation. 3 core principles govern every financial transaction in Islam. First, riba, or interest. Any predetermined, guaranteed increase on a loan or deposit is strictly prohibited. The Quran says, Allah has permitted trade and forbidden riba. Scholars across all schools agree, money cannot generate money without real economic activity or shared risk. Second, gharar, or excessive uncertainty. Contracts with hidden terms, ambiguous outcomes, or deceptive risk are void. You must know what you're paying for, what you're risking, and what the return is based on. Third, Maysir, or gambling and speculation. Profits cannot come from chance, zero-sum bets, or trading debt as a commodity. Islam encourages wealth circulation through real trade, asset-backed financing, profit and loss sharing, and transparent fees. If a system replaces risk sharing with guaranteed interest or hides uncertainty in fine print, it crosses into haram territory. So, does digital banking change the ruling? No. A digital bank that pays you 4% APY on a savings account is still dealing in riba. A digital bank that charges 19% APR on a buy now, pay later plan is still dealing in riba. The app didn't purify the contract. But digital banking can make Islamic finance more accessible. Why? Because lower overhead means lower fees. Transparent dashboards mean less Gharar. Real-time halal screening tools mean easier compliance, and Sharia supervisory boards can audit digitally in real time. The difference isn't the technology, it's the intention, structure, and certification. Digital banking is halal when it operates within Islamic finance boundaries. Look for these features. Interest-free accounts. Your deposits don't earn fixed interest. Instead, they're placed in Sharia-compliant investment pools where returns are profit and loss shared. Transparent fee structure. Monthly fees, transfer fees, or card issuance fees are permissible if they're fixed, disclosed upfront, and not disguised interest. Asset-backed financing. If they offer loans, they should use structures like murabaha, that's cost plus sale, ijara for leasing, or musharaka for partnership, where the bank owns the asset first, then sells or leases it to you. Sharia Supervisory Board. A certified, independent board of Islamic scholars audits products, reviews contracts, and issues compliance reports. Ethical screening. Investments and partner networks avoid alcohol, gambling, conventional insurance, pork, adult entertainment, and weapons. If a digital bank checks these boxes, it's not just convenient, it's compliant. Now, the red flags. These apply to digital and traditional banks. Interest-bearing savings or checking accounts. Fixed APY on deposits is Riba. Even if they call it rewards or cash back tied to your balance, if it's guaranteed and interest funded, it's problematic. Overdrafts and credit lines with compounding interest, borrowing money and paying more back regardless of use, is Riba. Islamic washing, marketing a conventional product as halal-friendly without a real Sharia board, asset backing, or profit-sharing structure. Hidden Gharar, vague terms, auto-renewing subscriptions with penalty fees, or unclear investment pools where your money might be in haram sectors. Speculative features, crypto trading, leverage, options, or yield farming within banking apps that operate on zero-sum gambling mechanics. Remember, convenience is a test, not a loophole. If the math is haram, the interface won't fix it. What do the scholars actually say? Let's go to the sources. The Islamic Fqih Academy of the OIC and AAOIFI state, banking tools are permissible if free of riba, gharar, and haram activities. Digital delivery doesn't change the ruling. Mufti Taqi Usmani emphasizes, the permissibility of modern banking depends entirely on the contract structure, not the medium. Contemporary scholars like Dr. Maysir and Sheikh Dr. Haytham al-Haddad agree. Digital Islamic banks are encouraged when properly supervised, but Muslims must verify certification, not marketing. There's a clear consensus. Form follows substance. An app is just glass and code. The ruling lives in the contract, the cash flow, and the oversight. Before you download, deposit, or sign up, run any digital bank through this checklist. Number 1. Does it charge or pay interest? If yes, it's haram. If no, and it uses profit sharing, it's halal. Number 2. Is there a certified Sharia supervisory board? Check their website. Look for published audits. No board means no guarantee. Number 3. Are fees transparent and fixed? No hidden penalties, no interest disguised as service charges. Number 4. Where is your money actually deployed? Ask for their investment pool breakdown. It must avoid haram sectors. Number 5. Do they use recognized Islamic contracts? Murabaha, ijara, musharaka, not conventional loan agreements with Islamic labels. Save this. Screenshot it. Use it. Your wealth is an amana, a trust from Allah, protected with knowledge. So is digital banking halal in Islam? It depends. The technology is neutral. The contract decides. If it's structured on riba, it's haram. If it's built on trade, transparency, and Sharia oversight, it's not just halal, it's a step toward ethical, faith-aligned finance. Don't let convenience compromise your conscience. Verify. Ask, demand transparency, and remember, Islam doesn't want you poor, it wants your wealth pure, productive, and purposeful. Drop your questions below. Have you switched to a digital Islamic bank? Share your experience. If this brought you clarity, hit subscribe. Share it with a Muslim friend who needs to see this, and turn on notifications. We're building a community that seeks halal wealth without compromise. This content is for educational purposes and does not constitute a personal fatwa. Always consult a qualified local scholar or certified Sharia advisor for your specific situation.